Hello, 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 everyone. Good morning. Good morning. How's everybody doing? Gonna get through this quickly. Good morning, George. Hello, Waka Waka. What a mess. Hello, Christoph. Markets are moving. The actually Fed Watch 2. I still don't think they're gonna hike 75, but it's going up there. It's moving all up. Gonna bring on Bob in a minute. We are here. So, good morning, Patrick. Welcome to Mauled Market Monday. Yeah, Bitcoin is dumping. That 21K level is going to get interesting. Celsius blew up last night. Tether's becoming unpegged again. So it is very interesting. Good morning, Lauren. NASDAQ was down. Yeah, you just put it in here, down up to 3% pre-market. Yes, I think we could be getting, especially with the expiration this Friday is huge. We could be getting closer to a capitulation bottom, and it's going to get tough too for the dealers to hedge this week with this volatility going into a massive option expiration on Friday. Let's see where we sit. Oh, good morning, options 22. Let's see. Hey, Chris. Let's see. Big macro down day. Let me just bring. Oh, by the way, there's not much going on with economic calendar. Here's what I was talking about. FOMC. This big up since Friday. And remember, negative gamma territory. And this, if we keep selling down into it, gets really interesting with volatility and with the theta decay going into Friday with that much negative gamma can get super interesting. Oracle after the close, don't need to dwell on that. With that, I'm not even going to bother with subscribers because you guys know if you want to be part of this channel, you just got to subscribe. With that, I'm bringing on Bob. Brick Wall Bob.
I'm
Hey,
only talking to subscribers this morning.
you're
That's
only
it.
talking to subscribers.
You
Well,
have
we
to.
got the
You have
regulars in here. We got a
to
lot
get
of
out.
people are tuning in to hear what, and thank you for popping on at the last moment, Bob.
Yeah, happy to do it. I had a bunch of drinks this weekend, and I thought that would make me feel better about this Monday, but it doesn't. Um, so, yeah, I want Mike. I texted you something that I
Yep,
thought was interesting, and you're
I
going to
got
see
it.
a lot of this. Yeah, you're going to see a lot of this, and this is from Ryan Dietrich. I've mentioned him before. I call him the voice of reason, and he tweeted out this morning that oftentimes we get extended sell-offs after a big sell-off Thursday or Friday. I don't know why he included Thursday into that. Uh, but what Ryan does, Ryan's job is to be the chief market strategist for a bunch of individual financial planners that are in a collective, right? So if you're an individual financial planner, you kind of got your own shingle, your own shop, or you're part of a group of smaller ones, you join LPL Financial, and Ryan is their chief market strategist, and they disseminate research, and you get to use their name, and you get to be an independent financial analyst, but say you're from LPL. So what Ryan does a lot is he tries to calm everybody down when things are selling off. I saw a lot of, I got a lot of tweets this weekend. Hey, what's that non-correlated strategy you were telling me about a year and a half ago? Some friends of mine run something called the Agility Fund, which has very good non-correlative numbers. And this is always the time of year when people say, "Hey, remember that thing you were telling me about?" I'm like, "Well, you missed it already, just so you know. Maybe next time you'll understand that a strategy that isn't performing as well as the S&P 500 in a straight up bull market is important to have." Okay, because this is the time and it's important to have. And Mike and I have said this over and over again, outperformance is more important to the downside than it is to the upside. In other words, if the index is losing a lot and you're losing less, you're valuable. You're very, very valuable. If you have a strategy, Mike's very good at this. If you have a strategy of getting out of things before potential big downturns, even if you miss a little bit of upside, you can make that up with other strategies. Or you don't have to make it up because it's more important to protect your capital on the downside than it is to keep up with things on the upside. But anyway, Ryan put this out, and I like this because it shows that there can be bottoming. But what I want you guys to notice again is 1 month out. What are the years that you're seeing here? You're seeing 2008. You're seeing look at the negatives. You're seeing 2008. You're seeing 2009. Okay. You're seeing 2020, two batches of 2020 in there, right? This is not as confident of a tweet as Ryan normally puts out. You know, in other words, this is the best he could find. Okay. And if you look at the 1 month out figures, it's about 40% that we're still lower 1 month out, and quite a bit lower if you count those up. I didn't count them exactly, but visually I'm seeing it's about 40% of the time, maybe 35% of the time. We're still down 1 month out. So, and this is from the person I consider to be the authority on being the voice of reason, or the reasonableness, is Ryan. And this is the best he can find. So don't be surprised if we get some snapbacks over the next week or so, and it's not enough. Now, a lot of this is based on the idea that Powell is now going to want to raise 75 basis points. And I say Powell because it's Powell. If Powell turns to the board and says, I think we really need to do this, I'm not going out there unless we do this, he can put enough pressure on the FOMC. He could say, you can go ahead and dissent. I just need the votes, right? And he'll get the votes. But the idea that somehow, again, 75 basis points is going to somehow stop the rise of energy, the shortfall in chips, it's not. We're still going to have inflation somewhere in the range of 4.5% and 5%, probably on the core, not just on the headline number. Services inflation is rising. That's the whole problem here. And if you look back to those times, even 87, these are periods of either effective stagflation or fear of stagflation. So that's what those periods are. I don't even have to go back and look at it because I've gone back and looked at these years before already. I showed you guys this about a month and a half ago. If you weren't subscribed then, aren't you sad you weren't? So if you haven't subscribed, please subscribe.
What's interesting to me with this also is, yeah, you do get some bounces, but a lot of them are not huge. And look at your downside risk for the upside potential. I'd rather, again,
a second ago, Mike's really good at this. This is exactly what I'm talking about. Go ahead, Mike.
Again, your downside risk is substantial, and your upside gains, there's like, all right, yeah, 12%, but look at some of these downside risk things, and like 2.1, 1.8, 2.3, when you could be risking this. Again, it's what we talk about. You got to protect your portfolio to the downside. That's first and foremost. You can always make up gains, especially when there's good trading conditions. And this is why I talk about with tactical trading. This is tough trading. This is not the time you just you put stuff on and walk away. You have to manage stops. It's very tough environment, especially with many asset classes unraveling. I mean, look at the 10-year move down. I had to put on the bigger harmonics. And by the way, the double is off the table. That never even got close. But I had to put on the harmonics. Where's the spread right there? Have you looked at the yield curve this morning? I know the 10-2s.
Yes. The 2s-10 spread is 10 basis points, but it was negative earlier this morning. 2.5 hours ago, it went negative.
Yeah.
So in other words, it's gone from 31 basis points on the 6th, so a week ago, to 10, and it actually went inverted. The 5s, 10s is negative 11. The 5s, 30s is inverted by 8 basis points.
Yeah, here's the 5 10s. You see that. And here's the 5 30s. Or that's the 10 7. Sorry. Where's the 5? I don't know if I have the 5. I have it somewhere. Here it is. There it is. And just the yield. I mean,
yeah.
The moves between Friday and today in the 10-year is massive.
Mm.
And then on top of it, you have the supposedly uncorrelated cryptos don't trade like everything else. Well, I mean, that's unraveling. And again, Celsius blew up last night, stopped redemptions on that. Tether's becoming unpegged. 21K is going to get interesting in that. Ethereum's just getting hammered.
Hey, Mike, I think it'd be a good time to talk in more specifics about negative gamma, simply because we haven't been there for a while. I think it'd be a really interesting time to talk about when you say it gets interesting, what you mean, because there's some new people like it. I don't think Anissa's ever heard you explain that.
Again, good morning, Anissa. Hold on, I gotta say, Amit. Good morning. Sorry, I'll have to get to some comments. Negative gamma. What that does is dealer hedging has to it's increased volatility because normally when you're in positive gamma, when things rally, the dealers to hedge get to sell into the rallies or buy into the dips. Negative gamma, they actually sell into the dips. As it's dipping, they're selling because they have to hedge off the other way, and when it rallies, they're buying, so you get increased volatility. Now,
You don't get the net of dealers and their
yes,
hedges.
you don't get the offset of the dealers having to do the opposite to the market moves. Just think of that. Positive, they do the opposite to the move. Negative, they have to go with the move to hedge. Now, where it gets really interesting is if anybody's traded options, I know there's a bunch of options traders here. As it gets close to expiration, moves get amplified. Why? Because you have the rapid decay in theta going into and that also amplifies the way gamma kicks in on moves and the way the delta changes. So it makes it even harder to hedge, and the volatility goes up even more. And now we're approaching, I mean, you see 3,800. Where are we trading right now? Even peak negative gamma, and this is roughly an estimate, but you get around 37, 300. It's peak negative gamma going into a massive quad witching with futures rollover and everything. I mean, this gets super interesting for this week. And then on top of it, again, we have the Fed decision. And then what are they going to say? Even if they stick with 50 basis points, what are they going to say in the press conference afterwards? Are they going to go, well, now 75 is possibly on the table for July, which I think is more likely than just going 75 now. But I think if they really
Right.
start going, hey, 75 is on the table, we're putting it out there,
Totally
that could
agree.
get interesting.
Totally agree.
Hey, we're on the same page. you know, so
I look puffy today, don't I?
you, I
What
look
happens
puff.
without?
It was the drinking, Bob. The
Yeah,
drinking didn't
that's what
save
happens.
us.
I
So
know. Got to get out on my bike and sweat this shit out.
exactly. Any other? Yeah, Binance halts all BTC withdrawals. They say there's a stuck transaction. See, this is the garbage that still goes on
I
in
love that.
crypto.
I love that.
There's
Go
a
ahead,
stuck
Mike.
transaction, and then you have Kramer tweeting just a few minutes ago, crypto, need the big crypto lovers to buy and stabilize. This guy should be off. I mean, get rid
He's
of.
horrible.
You're telling people to. All right, I'm done with this crap. With these, this is why we need the flush out.
It's funny because there's a crypto person on Twitter, hundreds of thousands of subscribers. I can't remember the name right now. But her tweet this morning was, people love to buy expensive Bitcoin. I'll never understand that. And it's like, no, that is exactly the opposite of what happens. You go out there and talk about crypto millionaires and how there's no option, and talk about how you bought it at 300 and now you bought a mansion on the beach and all this stuff. And people put all their money into it. And then when it gets cut in half or more so now, it's like 60% more. I think it's 65%, 70% now from the highs. And then they're upset that it fell that much. It's because of the way you guys are talking. It's not, people don't understand the concept of risk capital. Risk capital is capital you can lose. It's capital you can risk. It's not capital you need to pay $85 to fill your tank with premium like I did this weekend. That's not risk capital. So risk capital is money you have aside that is not part of your 6 months of income that you need in case you lose your job, which has now, by the way, that amount has gone up because of inflation. Risk capital is money you can lose and your life won't change. So that's just the dumbest tweet I ever saw. And again, is this people get emotionally attached to their investments, and they think somehow their investment judges their intelligence or not. And then they judge their self-worth by their own intelligence, which they have tacked on to their investment thesis. And that's completely wrong. Lauren's asking, what does that mean, Bob? I don't know what I said that he's asking about.
Uh, I don't know.
Sorry for the
We'll
rave.
see. Our precious metals still a viable hedge? The way things looking right now, everything's getting sold. Besides the dollar,
Yeah.
everything's getting sold. And the only other thing that's up slightly is natural gas, but everything across the board is getting sold. And this is what you see when also because people, there's going to be some forced liquidations probably this week again, where the stuff that is still holding up better, that has a profitable position, gets liquidated to cover the unprofitable transactions that are just getting.
Oh, I see what Lauren said. Real quick to that point, when all assets are being sold, there's people who are in need of cash for whatever reason. Usually it's margin calls. All right, what we're seeing is the Japanese yen rallying and everything else selling off.
Well,
So that's classic flight to quality type stuff because people are getting margin calls and they need to sell anything that had profit to what the guys on TV will say raise cash. That's one of the fancy ways that television analysts act like this is not so bad. People are out there raising cash right now. that's selling everything to get cash in their account so that they can either protect positions that are underwater. This is the classic mistake that it's an investor posit that then short-term or active investors try to adopt. You sell winners so that you don't have to dump losers. That's something that investors have done for years. Long-term investors have done that kind of thing. They've sold out on things they've got a lot of money in. They call it rebalancing sometimes, depending on on what it is they'll sell winners in order to not have to sell out of losers and take the cash because they're getting margin calls. Now, what ends up happening when you get a capitulation that Mike talks about is they sell out of those losers as well. They basically sell out of everything. And this may be the start of that. This feels like the start of that, but I'm not willing to say it is yet.
And the yen again actually spiked. The lineup here 135.15 was the high I believe from 2002, and we spiked above it before the little reversal. So
Right.
yen hit a new all-time high versus the dollar before a little reversal. All
So
right.
can I address Lauren's question real quick, and then I'll
Sure.
go, and you guys can do the other work
Where's
before the
Lauren's?
market. When tens go negative, so it's when the twos tens spread goes negative. So in other words, you take the 10-year yield and subtract the 2-year yield from it. All right. So if I'm looking at it from where I marked yields about 45 minutes ago, the 2-year was at 13. Okay. And the 10-year was at 9. Oh, and I'm sorry, wrong. The two, I'm looking at the difference between the two. The 2-year was at 316 and the 10-year was at 326. Okay. So that means the 2s 10 spread is positive 10. You're subtracting the 2-year yield, 316, from the 10-year yield, 326. And you get positive 10, so 10 basis points. That's a positive yield curve. When it goes negative, I'll use the example of the 5-year, 30-year. Okay, the 30-year yield is at 329. The 5-year yield is at 337. That's negative 8. Okay, now, when the yield curve is negative, if you think about the normal shape of a yield curve, it's shaped in an upward sloping way. Here is, I'm going to go to the side of my hand. This is the 2-year yield. This is the 5-year yield. This is the 10-year yield. This is the 30-year yield if you were plot it on a curve, okay, or on a graph. When it goes negative, it turns, okay, so that this is the 30-year and this is the 2-year. Now, if you think about what that means people are willing to lend money. It basically ends up with it's more important on a return to capital. They don't want to lend money out 30 years or 10 years. They'd rather lend it short. Okay. And that's a return of capital situation rather than a return on capital situation. And that usually predicts a recession. Not usually, a lot of the time has predicted that a recession is coming in the future. It predicts a slowdown. So the accurate part so Dr. Michael just said 3-year more accurate. Remember, you're looking at 2 separate interest rates, not just one. And the one that most economists look at is the 2-year, 10-year. That's why I focus on it. Okay, that's the one that most That's the most accurate recession predictor, is when the 2-year, 10-year curve goes inverted. That's the most accurate recession predictor. So that's the one I look at the most.
All right. Anything else? I'm going to just take a quick look at the charts for people to go into the open with.
Yeah. I'm going to, you're welcome, Doc. Lauren, I hope that made sense, but it's basically when the longer dated yields are lower than the shorter dated yields. That's an inverted yield curve.
All right. Well, thank you,
All right.
Bob.
I'll see you guys Tuesday afternoon unless something happens.
Well, something is happening, Bob. Talk to you
I'll
later.
talk to you later.
Thanks for popping on. All right, everyone. Thanks for being here. Hope you get something out of this. We're trying to be here for everybody, and be the voice of reason in the markets. Now, what I'm watching for on the open, there's not a lot of stuff to step in front of yet. Yeah, we could get a little bounce if it does start trading roughly in the S&P above about 38.20. I'm going to be watching this 1 hour rotation zone and the 12 and a half retracement, which would take us roughly 38.47 area, even 38.38 breakdown zone here. So that's on the rally. If we sell, again, we've already sold a lot. That's why you're into a reverse clear path move. If it does try to make a little pop in there, pay attention to the harmonics with that 1 hour rotation zone. And even if you look at the 4 hour, just to return that 4 hour, if you did get some kind of massive rally, it doesn't even get to that gap fill. So do keep that in mind. Selling off my downside, if it really starts cracking, my next area is 37.60. And then and I doubt we get down here today, but anything's possible. Major harmonic is about 37.06. So those are my downsides. So I'll be watching the VIX. The VIX, there you go. Trading above the 62.5 on these reverse things. So as long as it does close above about 31.80, going to be watching for a retest of these highs back at the beginning of May. Says statistically. So I'm keeping a very close eye on the VIX. Getting to the other stuff, NASDAQ. By the way, if we really tank, I'll try to come on at lunch or something to give an update. I have a super busy day. Key levels in the NASDAQ, again, I'd be watching right around 11,600 to 11,650 on a bounce on the sell move. Next thing is not till 11,300. The next major harmonic is not till 11,300. Dow still key support is about 30,581. That's the lows from the 20th of May on the rally. I'm watching this breakdown zone and roughly a return to about 30,960 area in there. Dollar index real quick, coming up, completing that double. And remember, it closed above the 62.5. We talked about this yesterday. Already hit that 87.5 and pulling back a bit. So going to keep it also a close eye on the dollar. If the dollar starts a little pullback, we might see some stabilization at least today in the markets. So what things I would be watching, keep an eye on the notes. We're at the harmonic right now, 115.25. Let's see if that stabilizes it. I keep an eye on the VIX, the dollar index, and the notes besides, and that will help navigate the indices. By the way, the Russell's closing in on its double target. So that still precludes a little more downside, at least in the Russell. And then if that breaks, about 1725. Your Qs, your next level is 275.92, 221.62 on any rally now. 284.50 is the level. Spiders, next is 375.93, then major cluster 370.35 to 371 on any rally. Really, oh boy, this is just ugly. Being 380, which is where we're standing there now, then I'd be watching about 385 on any rally. Let's see Tesla real quick. Again, you might, if the market stabilizes going in the open, I'm just watching for that gap fill play. But the key thing is if it closes below 684, statistically favors a return to the lows. But you know how many people rush into Tesla to buy it at every dip. So I'll be seeing on that gap fill play, watching that 52 to 60, 62 for the rollover play. Let's just roughly see where that would be. I'm just guessing. Oops, wrong. Well, I can just do it off of here. It was roughly the breakdown zone. Sorry, let me put it on the right way. So roughly this breakdown zone is the 50 to 62 and a half. So I'll be watching if it does try to fill that gap for a rollover play, especially if the market weakens. All right, but ugly charts are everywhere. I did that sector overview. Yes, we are open now. Let's just peek in on it. See what the NAS is doing. I did that sector overview yesterday, and again, I can't find a lot that's attractive. I cannot find a lot that's attractive. So that's why I wouldn't force trades. Everything's got to be really nimble. And if you don't have anything sit on your hands, manage any positions and don't let losers get too big. If you have things, that's where you take stops. Okay. You want to manage your positions. And if you don't have anything, even if we get a slight rally, would not be looking, especially with what we covered this week with the volatility. It's going to be a very difficult trading week. So you're better to keep, from my perspective, better to keep your powder dry. And if you can take advantage of some very short term moves, fine. Other than that, manage the risk first and foremost. All right, we'll come back in a little bit. I got to jump to the open now. Looks like it's trying to put in some little rally, but remember, this key area is first and foremost this 11,550. With that, and the S&P long way off from its even breakout area. So that's where we sit. Stay safe. Don't be silly. And I'll talk to everyone later today. Bye for now.